Hello and welcome to the Real Estate Marketing Podcast. I'm Adam Small, and with me, as always, is Doug Carr of DK New Media.
Hello, sir.
How you doing today, Doug?
Awesome.
Great. And we have Kimberly Small from Agent Sauce.
Hi, how are you?
Doing well. And we have a special guest in the office with us today, Leeann Kearley. And Leeann is here to talk to us about reverse mortgages. How you doing today, Leeann?
I'm doing great.
Great.
Wait. So Kim's not a special guest?
Well, she's with Agent Sauce, so she's not a special guest because she
I think you're
belongs
special,
here.
Kim.
Thank you. I think you're special too. Probably in a different way.
Oh, man. Okay, so we'll get right back to it here. So, Leeann, tell us a little bit about what you do and how you kind of got into the reverse mortgage business.
Okay. Well, I have been originating mortgages since 1978 in the Indianapolis area. And in 2007, I decided to switch over to doing only reverse mortgages. So that's the only type of financing that I do currently.
Okay. So now you said just a moment ago when we were talking off the air, you had an entirely different phrase for a reverse mortgage. What was that?
That's a good question. You will hear it referred to now as a home equity conversion mortgage.
Okay. So that's essentially a reverse mortgage.
It is. It explains it better because it basically is receiving equity from your home.
Right.
And the reverse mortgage has a negative connotation. And the reason is 30 years ago when they first came out, they were not a good program. And the banks made you sign the title of your home over to them.
Over to the bank,
and then you didn't have ownership of your home. About 16 years ago, FHA became involved. So they are an insured government loan with FHA that no longer happens.
And FHA is?
Federal Housing Administration.
Okay.
So it's a government insured loan.
Okay, great. So, I'm not sure. Did we actually just cover what a reverse mortgage was or no?
Well, there's a lot more to it than that.
Okay,
That's kind of that's the title.
Okay, so tell us, what is a reverse mortgage?
Basically, some of the requirements are you do have to be, at least one of the parties has to be 62 years of age to qualify.
Okay.
And then you're going to receive a percentage of your equity as income. And you can receive it as a lump sum payment. You can receive it in a credit line where it actually grows.
Okay.
Or you can receive a 10-year payment for lifetime. So it's based on the age of the borrower.
Okay, so and it's all against the equity of your current home. Is that correct?
Correct.
So, depending on the type of reverse mortgage, you could get a huge chunk of money up front, but how does that affect the living in the home?
As long as that's your primary residence, you're able to have the reverse mortgage available to you. You do have to pay taxes and insurance. So you're responsible for taxes and insurance.
On the home?
On the home. It does have to be your primary residence, so we can't do this on a rental or an investment property.
Okay.
And basically, they're going to advance equity that you can use. You could choose to get it in a lump sum payment. You could put it in the credit line, or you could set up a monthly payment. So it's however you choose to utilize the equity that's available to you.
Okay. So, and then what happens, I mean, you said you have to be 62 in order to qualify. So at some point in time, most people probably pass away during the life of this. So how does that work in regard to the home ownership and all that?
Well, when the last person passes away, so if it's a couple, which a lot of times it is, if husband passes away, the wife continues to live there with no mortgage payment as long as she lives in the house. Upon her passing, then the property goes to the heirs.
Okay.
Based on their will, they're going to pay off whatever proceeds they used on the reverse mortgage plus interest, and the equity will go to their heirs.
So if I had a $500,000 home and used up $100,000 of that equity, if you will, with the reverse mortgage, then the heirs would be on the hook for the $100,000.
Yes, and that's like any other mortgage.
Right.
It's like a typical mortgage.
Okay.
The only difference between this and a regular mortgage, of course, you don't make payments. But because you don't make payments, it's negative amortization. So I counsel people very thoroughly that each month they'll get a statement and their balance is going to go up because the best way to think about this is you're not paying this mortgage, your property's paying the mortgage when you no longer live there.
Right.
So you'll see your balance go up because you're not paying interest. If you wanted to make payments, you could.
Okay.
But
so does it ever happen that somebody kind of outlives the value of the?
That's a good question. And because it's an FHA loan, it's insured by FHA.
Okay.
So if you were to get this loan at 62, you live there for 30 years, and let's say the values of the homes drop, which they did,
Right.
and your value and your balance is going up because you're living there essentially for free, then FHA mortgage insurance would pay the difference. So upon your death, your heirs are not responsible. Now, they don't have an inheritance of equity
They don't
because
get the
you
home.
used it to live on,
Right,
and
right.
you owe more than the house is worth. But
Okay.
FHA mortgage insurance will pay the deficit, and no one is responsible for that.
Oh, okay. So basically, I mean, there's still an inheritance there, provided that you don't outlive the value of your home, which, you know, I mean, if you ended up having to sell the home anyway because you couldn't afford to live there anymore, it's the same situation for the heirs. So the heirs really aren't impacted negatively.
No, they're not. There's no negative impact to them, and it could be a positive if values don't go. I mean, it's like talking about the stock market. We don't
Right.
know what housing's going to do.
Right,
So
right.
if it were to continue, right now it's on a growth rate.
Right.
If it were to continue to grow, it could be that your heirs are going to have an actual income profit. They're going to get an asset when you sell the house, but we're not going to guarantee that because,
Well,
again,
you
we don't
can't-
know.
You never know what's going to happen,
Right,
right?
right.
You know, zombie apocalypse or something, right?
Right, right. Well, you have to prepare for it.
Exactly.
They don't need homes.
Zombies don't?
No.
No, they don't care where they live, do they? All right. So now earlier you said that you had to be 62 in order to qualify. What other kind of qualifications are there?
Basically, 62, it has to be your primary residence. We will do a financial assessment, but we don't look at credit scores. So it's not as stringent as a regular forward mortgage approval
Okay.
process is. We don't look at credit scores, and we don't look at debt ratio. So we look at residual income.
Oh, okay.
So a lot of people that could be denied for a traditional mortgage would be approved for this because of the fact that we're not looking at the score, and we're going to just make sure they've got enough income to pay their taxes and insurance.
Okay. And what if I owe on my home? Say it's valued at $500,000 and I owe $250 on it. How does that work? Can I get a reverse mortgage, or does the home have to be paid off, or how does that work?
You can have an outstanding mortgage and get a reverse. However, in the example that you just cited, we are lending 40% of the value of the home. So we'll do an appraisal and we'll lend 40%. And then that 40% will pay off the mortgage. So if you owe more than 40% equity, you would have to bring that difference to closing out of your own pocket.
Okay. So now, if the home was paid off, the 40% thing doesn't come into play. Is that what I hear
That's
you
how much
saying?
we'll lend. If the home is $100,000, you're going to get $40,000 to supplement your income. That's your reverse
Okay.
mortgage proceeds that you receive as
Okay.
income.
Okay.
And if you had a $40,000 mortgage, then you're not going to have any income, but we're paying off your mortgage. So that's the amount of money you get, and you just allocate it based on whether you have a mortgage or whether you own it free and clear.
Oh, okay. So you only lend 40% of the value of the home. So
That's correct.
So generally speaking, you know, worst case scenario, somebody should typically end up in a net positive there, you know, from an heir's perspective. Is that
Correct.
Okay.
Correct. That's why we do that, because we don't want the house back. So we
Okay.
definitely are going to make sure that they have a good equity position, so there's an incentive for them to sell it.
Right, right. Okay. Well, that makes sense. That makes sense. So do both parties have to qualify? Say it's a married couple. Do both parties have to qualify, or just one, or
Only one has to be 62.
only one?
Only
has to
one
be
has to be 62 years
and
of
then
age.
beyond that, you're just looking at the income and stuff like that.
Mm-hmm.
Okay. Okay. Interesting. Very interesting.
Who should consider this type of loan? Obviously, people that need extra monthly income. Anybody else? Any other things that they should consider that this type of loan would help them?
Well, it used to be, I would say 11 years ago when I first became involved in this industry, it was the loan of last resort is what they would say. Now, financial advisors and elder law attorneys are really good referral partners to me, because if you do own your home free and clear and you set up a credit line, there's a growth rate attributed to that. So I show you with an amortization schedule how you're actually going to have more money available to you. To give you an example, and of course, it's based on the value of the home. But I just did an example for a gentleman. His home is worth $425,000. So he's going to have about $190,000 in his credit line immediately, because his home is owned free and clear. In 20 years, that $190,000 would grow to about $500,000. In 30 years, he's going to have $1 million in that account. So if you do that early, and he is at 62, when he's 92, he's going to have over $1 million and it's kind of like an annuity. It's based on his age, and he's using it for long-term care insurance because his wife is diabetic. She won't be approved for long-term care insurance health-wise, medically, and she also can't afford it. So he's strategizing, and he's using this account to grow so he can pull from it, and he'll have that
Wow.
money available. And that's what
Yeah.
a lot of people don't realize that, and that's why financial advisors are jumping on board and saying, let's strategize. So instead of cashing out your investments,
Right.
live on the equity in your home, use it for another purpose, and then you can keep your investments safe.
Well, I mean, how great a thing too. I mean, if you worked your whole life, 62 years old, and you're starting to run into money problems, and you have this incredible asset under you,
Right.
now you can live the rest of your days out comfortably and not have to worry about it, and not have to worry about your kids and everything else. So, how long from the time that someone decides that they might want to do this? What's the process like to get approved, and what's that timeline like?
Usually about 45 to 60 days.
Oh, wow.
There is reverse mortgage counseling. It's a third-party agency that requires that they do this counseling, and that's just so that they understand it,
Yeah.
and to make sure that I disclosed all the fees. That the loan officer has told them, okay, this is negative amortization.
Right.
These are the fees that you're going to pay,
Right.
just to make sure that they're protected and they understand how the program works.
Very interesting.
That's incredible.
It is. What about real estate agents? Now, you said the financial advisors and planners and stuff like that are really liking the program. So they're probably referring quite a few people
Yes.
to you. How does it work with real estate agents? I mean, are you approached by real estate agents? Are they aware of this type of program? Because I know that a number of real estate agents work with, empty nesters and that sort of thing, and they help people that have kind of, reached that stage in their life and they downsize or whatever, or maybe they don't want to. Maybe there was in fact an unexpected death or something. So do you work with a lot of realtors? Do a lot of realtors know about what you're doing?
A lot of realtors do not know about it. So there's a lot of my job is education, because the examples that I've been giving you are all about a reverse refinance, someone who lives in the home. But you can
Right.
do it as a purchase. It's the
Okay.
same requirements. You would put 60% of the value of the home down,
Right.
but the other 40% you could finance as your reverse mortgage and have no mortgage payments. We're finding that builders really love this because builders love the upgrades. They want
Right.
to sell the garden tub and all the upgrades that the people
shiny
want.
brass and all-
right.
yeah,
and so
yeah.
they can afford 40% more upgrades because they don't have to worry about what it does to the payment.
So if you wanted to purchase a home, as long as you had 60% of the value, you could purchase the home and then not have a home payment for the rest of your life
Correct.
and pass it on to your children as well when you were done.
Yes.
That's insane. I mean, it's like buying a home for 60% of the value and not having to worry about it.
Absolutely.
So
Absolutely.
that's
And before
nuts.
the empty nesters would use all their cash
Right,
to
right.
downsize, and now they can keep that money available to them for emergencies or whatever and still afford the house that they want. So
Right.
and realtors like it because their commission is increased because the
That's
value
the
of the home.
40% more. Yeah, exactly.
Yeah,
I got you.
yeah.
Exactly. So
Can any lender do a reverse mortgage? Are there special qualifications that you've had to go through in order to do these types of loans? What should somebody ask a potential lender?
That's a
when
good
considering
question.
a reverse
Most
mortgage?
lenders do not do this. Only a few specialized lenders do it. It's an FHA program. Now, as a loan officer, I'm licensed, and all loan officers now have to be licensed. But you would have to check and make sure that, in fact, do they even offer that program? And then maybe see if you have a loan officer that's local that you can meet face to face instead of trying to do it on the internet or through the mail.
Anywhere that they can go to a site that has, where they can find someone that specializes in this type of loan?
If they just want general information, they could actually just look at the FHA government website, and it would tell them all the parameters. As far as finding a specific person, you are licensed in each state. So, for instance, if someone called me from Florida, I could not personally help them, but I could get them to someone who could. I'm only licensed in Indiana.
Okay.
So if you want information, you could go. It's probably FHA.gov would be my
Yes,
guess.
that's correct.
And read some generalized information.
Yes.
And if you're in the state of Indiana, they could reach out and contact you.
Yes.
Right? Do you have a number or a
Yeah,
email
let me
address
give you,
that
yeah, my
wanna-
phone number would be the best way to reach me.
Okay.
It's 317-529-9399, and it's Leeann Kearley.
Are there any organizations, now you said you have to be licensed and certified, so is that specific to the reverse mortgage program, or is there a certification license specific to that, or is that just a national lender certification?
It's just a national. It's just,
Okay.
and so when you get your license, you have
So
to
it's
know
a
how
part
to
of
do.
every
Yes.
lender has to know about those programs, and that's actually a really good thing. So,
Yes.
okay,
Now, they may
great.
not all offer them, but there's questions about reverse mortgages when you go to take your licensing test.
Okay, great. So everybody should know at least the core of
The
it
basics.
anyway. Right, yeah. So, Doug, you got something?
I just, I have a elderly mom, and as soon as I said, reverse mortgage to her, she just about had a stroke, and
Blew the roof off the house,
and it's
right?
because of the lasting, the lasting misinformation or the previous program, and
Right,
so,
right.
15 years, you guys are still fighting
Absolutely.
that stigma,
Right.
on it. And so this is good. I'm gonna make my mom listen to this. So
Yeah.
Just make sure she comments to you, not to us.
Well, and then I can show them specific examples. I can show them in writing, and then the counselor's going to go over with them and
Right.
say, this loan is
Yeah.
still your home. You're free to pay on it. You're free to sell it. You can do whatever you choose to do. So, but we have to get to that point because, like you say, most people just cut us off when they hear reverse mortgage.
Right.
Well, I'm gonna say what was the other term?
Home equity conversion mortgage.
That's what I'm gonna
You're
tell
going
her.
to fool her with that,
Yeah,
right?
I'm gonna fool her with that.
I think
yeah.
you should look into
Yeah,
this.
a home equity conversion.
There you go. Maybe we covered this earlier, maybe not. I don't recall, actually. We've only been talking about 15 minutes, and I don't recall. Even if you do qualify, are there people that really shouldn't do a program like this, even
Yeah.
though they qualify?
Yeah, it's a long-term loan because there's fees involved. So if you said, I'm going to sell my house and move to Florida in 6 months, I'd say you shouldn't do it because of the fees that are involved. You need to know that, hey, this is where I plan on staying. Now, we know life can throw a curve and it could change their plans, but if they
Right.
specifically say, hey, my goal is to stay here, then they absolutely should look at this as a viable option.
Right, and if they know that they're moving in the next year or two, then
I
they
would not recommend
touch
it.
it. Any other circumstances where you maybe wouldn't touch it?
Oh, I think if you just wanted, I had someone contact me and they wanted a car loan and they were buying a used car for $10,000. I said, I think you should just get a home equity, a regular loan where you have to
Right.
make payments.
Right.
But for $10,000, the fees are going to be about half that. So why would you bother doing
wow.
that?
Oh,
It's not. It's not feasible at that point. Or, I mean, let's face it, not everybody should stay in their home.
Right.
If I had a daughter lived in Ohio, the adult daughter, dad had dementia and mom was blind and she wanted to get a reverse and keep him in Indiana. And I said, it doesn't sound to me like they should be staying in their
Sounds like
home.
they should be closer to you,
Right,
Yeah,
right. They need
yeah.
assisted living or,
Right.
so now I
you
will
need to look
say
at your whole circumstance.
it's so different for everyone. My oldest client was 96 and she was in hospice care and
Uh-huh.
she took out a reverse mortgage to stay in her home and pay for
hospice at
24/7
the home.
care.
Yeah.
But in hospice care, your life expectancy is 6 months and she
Right.
lived a year and a half. And I think it's because she stayed in her house
She
and
was
she
happy
hired
where she
someone to
was,
take
yeah.
care of her.
You're right. Yeah,
Yeah.
you're absolutely right.
Yeah.
So
Well, curious at that point. So this is the terrible question. But so then you die.
right.
What happens then? Is it that your basically your kids notify the mortgage lender?
Yes, and then the lender's going to give them up to a year to market that house, sell it, and pay off the reverse mortgage.
Okay.
The mortgage isn't going to be called due immediately.
Yeah.
They understand that you need to market, and as long as you keep in contact and say, here's a listing agreement, I'm making an effort,
Yeah.
it's going to be fine. And then you pay off the mortgage like any other mortgage, and the equity goes to the heirs.
They don't
Oh, awesome.
necessarily have to pay off the mortgage, or no, I'm sorry, they do have to pay off the mortgage, but they don't have to necessarily sell the home if they pay the mortgage
Good
off.
point.
Is that correct?
Good point. They could get a traditional mortgage and stay in that house.
Right,
Yeah,
okay.
they don't. If it's the family homestead and they don't want to lose it,
Yeah.
they can keep the home, but they have to pay off the reverse because the reverse was in.
It's a debt
Yeah,
that's owed,
yeah,
right?
yeah,
exactly.
And it was
So-
based on that one person's life expectancy.
But
so.
if they're able and capable of getting a mortgage, then they can keep the home
Absolutely.
and continue on, right?
Absolutely.
All right, right. So cool, very cool. So you use the example with the man whose wife had diabetes. Do you have another example that wouldn't necessarily be, medically related that would kind of illustrate?
Oh gosh,
how it
I've
could
got
benefit
I've got
somebody?
lots of them. Now this is something that's happening statistically. They're showing that seniors are having a high percentage of divorce.
Mm-hmm.
And so I had a woman who came to me. She had to pay her ex-husband $40,000. There was a lien against her house The only way to pay it would be to sell the home. So once we did the appraisal, she had enough on her reverse mortgage equity proceeds. We paid the husband the $40,000. We paid off her $30,000 mortgage. She received $12,000 at closing, and then she had $40,000 in the credit line that I discussed earlier that each year is going to actually increase if she doesn't touch it. So she went from being basically homeless, having to pay her ex,
$70,000 in debt,
to retaining her home and having a nest egg.
Nice.
Yeah.
Nice. So there's a real strong case for at least exploring the options here, right? So
Anything else you want people to know about reverse mortgages, how they've changed, or any other misconceptions that people have? That
I think the number one is just you don't know what you don't know. And I promise you, if you would just give me 30 minutes to talk to you, I'll teach you something new. And you'll find out that it is not the loan of last resort, and it's going to really help you retire well.
very nice. All right.
It just sounds a perfect way for me to spend my kids' inheritance. So.
Well, I mean, do you want to send them a check after you die, or you want to take them to Disney World and ride the roller coaster with them, you know?
Oh, he wasn't talking about taking them anywhere, just so we know.
Are you kidding me? Okay.
Leave them the vacuum cleaner.
All right. Well, I don't have anything else to ask you. It's been really great talking to you. Kim, do you have anything?
I'm good.
Doug?
No, it's great information, and you did it so concisely, so that's awesome.
Leeann, any final thoughts?
No, like I said, you've got my phone number, 317-529-9399. I'd be happy to do a free consultation and let you know how, with your circumstances, this can benefit you.
Well, thanks so much for joining us, Leeann. It's been a pleasure and really informative. And all the listeners out there, thank you for listening, and we'll see you next time on the Real Estate Marketing Podcast.